Hello guys, welcome back once again to the Financial Academy YouTube channel. Welcome back once again. My name is the Financial Academy. So in today's video episode, I'm going to be teaching you guys how to trade Forex successfully without the use of an indicator. Yes, of course. In today's video episode, you're going to learn everything on how to trade Forex successfully without the use of indicators. So please, if this is what you like, make sure to give this video a thumbs up, like this video, subscribe to my YouTube channel, and also comment down below if you have any single question concerning any of my YouTube videos. Because in this channel, I teach everything concerning the financial market, which is the forex market, the stock market, and the cryptocurrency market. So please make sure to watch this video from the beginning to the end. As I will take you to my screen, I'll be able to break down everything you need to know on how to trade forex successfully without any use of indicator. Because you need to know in forex, price is king. Price action is king. Everything still boils down in price. So stick with me as you are watching this video. Make sure to like it, subscribe, and comment down below if you have any single question. Right now, I will take you to my screen. When I take you to my screen, I'll be able to break down everything and anything you need to know on how to trade forex successfully without using of any single indicator. So follow me right now. Let's go to my screen. Let's go.
Hello guys, welcome back to my screen. So let's begin from where we stop. Mastering the market, a complete guide to trading forex successfully without indicators. So let's begin. We are going to start with the introduction, which is the naked trading philosophy. Understand how to trade nakedly without indicator, which is a pure price action. Are you getting my point? So let's continue. In a world saturated with complex trading platforms flashing with colorful indicators, a quiet revolution is taking place. Experienced traders are returning to the basics, trading naked charts, free from the cluster of lagging indicators. This process isn't just about rejecting technology, it is about understanding that price itself tells the authentic story of the market sentiment. Are you getting me? So, trading without indicators requires a different mindset, one of patience, observation, and trusting what the market shows you rather than a mathematical formula predicts. This comprehensive guide will walk you through exactly how to master this pure form of technical analysis. So, this guide is going to teach you on how to master pure technical analysis as a trader and not to focus on mathematical coded softwares, which is indicators. Understand? But you guys to focus on pure technical analysis and pure price action. Are you getting me? So let's continue from where we stop. Why trade without indicators? So before we dive into how, let's understand why we trade without indicators. It is very, very important. The limitation of indicators. Let's continue. The most popular indicators like moving averages, RSI, MACD, stochastic, and so many other share one fundamental flaw, which is they are lagging. Yes, of course. One feature of an indicator is that they have lagging features. Yes, of course. They are lagging. Let me break that in a layman understanding. They are slow. Understand? They don't follow the price movement. No, they must. What they do is that they take place the moment the price have already moved. So it's like they are following the price of the market at the back, not going hand in hand with the market price. Are you getting my point? So they are calculated based on price data. Yes, of course, yes. They are calculated based on past price data. And by the time an indicator signals a buy or sell, a significant portion of the move may have already occurred. Are you getting my point? So they what indicator normally do is that they take place the moment the market have already passed by before they can move on. So they are working behind the price. Understand? Instead of working along with the price. Are you getting my point? So now the advantages of price action trading. So this is the advantages of price action trading. Number one is real-time information, because price reflects on all known information immediately. Number two is reduced decision paralysis, no conflicting signals from multiple indicators. I get my point right now. Then number three, cleaner charts, because it is easier to spot an important level and pattern clearly in pure price action without even you needing to use indicator. Number four, enhance intuition, meaning that it develops a better understanding of market structure. Yes, of course, price action helps you to know a deeper and have a more deeper knowledge and understanding of market structure. I get my point. Then the other one is this universal applicability. Yes, of course, it means that it works on any market or any time frame. Yes, of course, time pure price action works in every time frame and every market or every financial asset, whether you are trading crypto, whether you are trading stocks, whether you are trading forex, whether you are trading in commodities, what anything, any asset that you are trading, was it is a financial asset, pure price action goes with it. I getting my point. So now let's continue with the part one of this video, which is the foundation. So now let's now go to understanding market structure, because as a trader you need to understand market structure. It is very, very important for you to understand market structure, because which is number one, supply and demand zone. These are the foundational blocks of price movement. Yes, of course, because let me break this down for you. Price move zone by zone in the market, because price don't just move randomly. No, price move to a certain level for a purpose. So the price in the financial market moves zone by zone. Now, supply and demand zone. These are the foundational blocks of price movement. Unlike traditional support and resistance like lines, supply and demand zone are area where significant buy or selling occurred, creating an imbalance. So, supply and demand zone are area where a significant buying or selling occurred, creating an imbalance. So, what is demand zone? Demand zone are the area where price fall rapidly, then reverse upward sharply. This becomes future buy area. So of course, let me break down again. A demand zone are area where price fall rapidly and then reverse upward sharply, because this area becomes a buying area in the future. Then what is supply zone? Supply zone are area where price rose rapidly, then revert downward sharply. This becomes future selling areas. I get my point. So now you can call it supply and demand. You can call it you can also call it support and resistance. They are the same thing. So don't confuse yourself. Supply and demand and supply and resistance, they are the same thing. So that is why I first of all bring this down for you. I will still break it down for you in the next time, which is still the same thing, so that you don't get confused, because I love to give people clarity when I'm teaching. Are you getting me? Now, how to identify them? One is that look for basis. You need to go to your chart and look for basis where the price was consolidated before making a strong move away. The zone is the entire consolidation area, is not just a line. I get my point. I understand. So let's continue. Support and resistance, which, why similar to supply and demand, these are more psychological level where price has reacted multiple times. I get my point. So support and resistance, why they are similar to supply and demand, these are more psychological levels where price has reacted multiple times. Understand? So psychological level is a round up number, that that the banks, hedge funds, and big institutions, look at when they want to, sell off or buy off a particular price. For example, if you are, if let me say, if you're in Nigeria and you want to go and buy, let me say, the price of egg, and the owner is telling you the price of egg is 105 naira. So you, as a human being, what is the nearest significant whole number nearest to 105 naira? Because we human beings, we love to, price a particular goods at a significant amount of at a significant whole number. So now you will tell the person, okay, can you sell for 100 naira? That 100 naira is not a significant number because it's a whole number. So instead of buying at 105 naira, then you will like to buy it at a discounted price of 5 naira. Then you can buy it for 100 naira, because you may not have the 5 naira that you give the person. So that 100 naira is a whole number. So for example, let me say in Euro USD, for example, a significant whole number in Euro USD is 1.2020. It is a significant whole number. Then another significant whole number in Euro USD is 1.25. So any number that is whole, that doesn't have an attached to another number, to another number except zero, it is a psychological level. So you need to pay attention to those levels because it's very, very important. So towards the video, I will go to my chart and show you, examples of, what psychological levels are. I get my point. So let's continue. So now, what are these horizontal level? Horizontal level, are price level that have cost reversal or pause. Are you getting me? Yes. Horizontal levels are price levels that have cost reversals or pauses. Then dynamic levels. Dynamic levels are trend lines, moving averages. If you must use one to, it is a simple moving average. So as a trader, if you must use one indicator, it is a simple moving average because it can help you identify a dynamic support and resistance. Understand? Then round numbers. Round number are psychological level, which I've already explained for you before, like 1.200 in Euro USD or 1.2500 in Euro USD, 1.30, 1.3500, 1.40, 1.4500, and so on and so forth. I'm just using Euro USD as an example in this video. Are you getting my point? Then let's continue. We have the market context, which is the trend versus range. Understand? So before analyzing elsewhere, determine the market condition. Are you getting me? Which is trending market, whether the price is moving in a series of higher high and higher low, which is the uptrend, or lower high and lower low, which is the downtrend. Are you getting my point right now? Then ranging market, where ranging market is all about where price is oscillating between the clear support and resistance. Are you getting my point? So yeah, your trading strategy should adapt to this condition. Are you getting my point? Yes, of course. Your trading strategy must adapt to this condition. When the market is moving in an upward direction, you buy. When the market is moving in a downward direction, you sell. Then when the market is between the buyers and sellers, when there is no specific movement and there is no clear direction in the market, is either you trade the support and resistance, or the best advice I can give you is to what? Stay out of the market. I get my point right now. Now, let's continue. Your trading strategy should adapt to this condition. In trending market, you look for continuation pattern. Then in ranging market, you look for reversal pattern at the boundaries, which is the boundaries here means the support and the resistance. Are you getting my point right now? Now let's go to the part 2, which is reading pure price action. Yes, of course, because you need to know how to read pure price action if you want to be a successful trader, or if you want to be a successful trader in general. Are you getting my point? Number 1, candlestick pattern. Yes, of course, it is very, very important because you can't be a successful price action trader without knowing how to read the candlestick pattern. I get my point. Because candles tell a story of the battle between buyers and sellers. Focus on these key patterns. 1. The single candle patterns. Pin bars or pinning tails. Because pin bar, one, it shows rejection of price. A long wick upward in a downtrend, suggesting that selling pressure remains. A long wick downward in an uptrend suggests a buying pressure. Then we have engulfing pattern or engulfing candles. A candle that completely engulfs the previous candle's body shows a strong in shift momentum. Are you getting me? Then we have multi-candle patterns. So inside under multi candle patterns, we have inside bars. Inside bar is a candle completely within the range of previous candle, which shows consolidation and often precede breakouts. Then we have outside bars. Outside bar is a candle that engulfs the previous candle's high and low, which shows increased volatility and potential direction change. Are you getting me? Then let's continue from where we stop. Then we have order flow clues. Are you getting me? Though you're really not using indicators in Forex, you can infer order flow through 1. Speed of movement. Yes. Order flow clues is an indicator that helps you to know where the most of the money moves in the market, to know where most traders place their trade in the market. Understand? So you can basically see the percentage of amount of people trading a particular asset. So this is what order flows helps you understand. So 1. Speed of movement. So rapid moves suggest strong institutional participation in order flows clues. Are you getting me? Then pullback depth. Shallow pullback in trend shows continued dominance by the trend direction. Number 3. Lack of follow through. When a breakout lacks momentum, it suggests false moves. Are you getting my point? Then the part 3, which is the trading framework. Yes, of course, because there are 5 steps to naked trading process. Yes, of course. Yes, there are 5 steps to pure price action process. So number 1 is identify the higher time frame. Yes, of course. Listen to this step. Number 1, identify the higher time frame, which is the daily, 4 hours, or the weekly. Listen, always start with a bigger picture. It is very, very important. Are we in an uptrend? Ask yourself this question. Whenever you enter the market, the first thing you need to ask yourself, what is the trend? Are you in an uptrend, downtrend, or range on the daily chart? This will determine your bias. So you first of all ask yourself, what is the market condition? Whenever you open any asset, you need to go to the higher time frame first, daily, weekly, or 4 hours, as the case may be. Ask yourself, what is the market direction? Is the market moving upward? Is the market moving downward? Or is the market ranging? This is the first step you need to follow. Then the second step is mark key structural levels. Yes, of course. Mark key structural levels. Draw horizontal lines at significant swing highs and low from the past week or month. Mark clear support or supply and demand zones, which is step 2. Are you getting my point? Then step 3, wait for price to approach these levels. Yes, of course. Once you have marked your key structural levels, which is the support and demand zone or supply and demand zone or support and resistance zone, then the third step you need to follow is what? Wait for price to approach these levels. Patience is your greatest tool as a trader. So you need to wait patiently for the price to approach this level. Don't trade, don't trade in no man's land. Yes, of course. Meaning don't trade in the middle of range, because you can't be moving in a because you can't be walking in a moving trade. No, you have to wait for the train to pass, then stops before you enter the train. Are you getting my point? So it is very, very important. You need to be patient as a trader. This is number one skill you need to learn as a trader. Understand? Wait for the price to approach your predefined identified levels before you execute or before you put any trigger. Trigger I means before you buy or sell any particular asset. Then step 4, look for price action confirmation. Are you getting me? Yes, of course. Look for price action confirmation. At this level, watch out for pin bar showing rejection, which is number 1. Watch out for false breakout, which means price breaks a level, then quickly reverses. Then the next thing you need to watch out is momentum showing smaller candles at the level. Then step 5 you need to follow again is execute with proper risk management. It is very, very important. Whenever you are executing any trade, make sure you are executing with proper risk management. Number 1, entry after confirmation. When you enter, whether you are buying or selling, make use of stop loss. Yes, of course. Beyond the level of recent swing points, always place your stop loss beyond the level of recent swing points. I get my point. Don't put your stop loss very tight so that you don't get stopped out when the market is fluctuating. And then last it will go down in your intended direction. No, don't do that. Set a stop loss beyond the level of risk or beyond the level or recent swing so that you can give your trade a room to breathe before the trade can move your intended direction. Because once you place a trade, the trade first of all move a little bit up and down before it can start to move in intended direction. Are you getting me? Then after setting your stop loss, then take profit. Yes, of course, set your take profit at the next significant level, or 1:5 or 2 your risk to reward. Are you getting my point? Then let's move on to the specific setup to trade. Then, because I love teaching people, the kind of setup that is very, very necessary for you to trade, or the setup that you will see in the market, then you can execute your trade, especially if you're a beginner starting out in trading. Are you getting me? Number 1, the bounce play. Yes, of course, which means the ranging trade. Yes, of course. Some people are trading the ranging trading strategy. Are you getting me? Which are these? Price approaches a well-established support and resistance level. Then look for a reversal candlestick pattern like pin bar or engulfing candle. Then number 3, enter on confirmation. Set a stop loss beyond the level, and then target the opposite side of the range. Are you getting my point? Then number 2, the break and retest confirmation. Make sure that the price breaks a significant level, then wait for the price to return to that level. Are you getting my point? Which is now flip to support or resistance. Then look out for rejection at its retest, and then enter in the direction of the original break. Are you getting my point? Yes. These are the things you need to see in the market. The first one is the ranging trade. The second one is the trend continuation strategy trade. Then this third one is the trend pullback. What I mean by pullback is, let me say the price is moving upward, because in price the price does not just move upward like a shooting rocket. No, it moves like when you are breathing. When you breathe in, you breathe out. When you breathe in, you breathe out, because prices moves in waves. So when it move past when it move upward, it reverses a little bit and then move upward again. It reverses a little bit and move upward again. This is what we call a pullback. So the third one is the trend pullback. So in a clear trend, wait for a pullback to a dynamic trend line or recent support or resistance. Look for price action showing the trend resuming. Then number 3 is enter in the direction of the trend. Yes, of course. Then part 4, we have risk management, which is very, very important, because I can't teach you this topic without telling you about risk management. Because what makes a successful trader is not the amount of money he makes in trading, no, but how much of his capital he is willing to protect whenever he is trading. Are you getting my point right now? Which is risk management, which is your true edge. I wrote it here, risk management in this part 4, your true edge in the market. So let's continue. No strategy works without proper risk management. Yes, of course. So let me give you a free tip. You can have the best strategy in the world, but if you don't have this, if you don't have the best risk management as a trader, my brother, my sister, you will lose. So when trading without indicators, this becomes even more crucial. Understand? Because no strategy works without proper risk management. You need to have this at the back of your mind. Number 1, position sizing. Yes, of course. Never risk more than 1 or 2% of your account in a single trade. Let me repeat it again. Never risk more than 1 or 2% of your account in a single trade. Calculate your position size based on the distance to your stop loss, which is number 1. Number 2, the minimum of 1:1.5 or 1:2 ratio, risk to reward ratio. Yes, of course. Because when you are risking 1, you are making 2. When you are risking 1, you are making 2. Or when you are risking 1, you are making 3. But make sure when you are risking 1, you are making double of what you are risking. Are you getting my point? Or when we are making 1, or when we are risking 1, you are making 3 of what you are risking. It is called risk to reward. You are risking 1 and you are targeting 3. When you are risking 1, you are targeting 2. It is very, very important. Only take trades when your potential profit is at least 1.5 times your risk. This means if your stop loss, only take trades where your potential profit is at least 1.5 per risk, then that means you will stop loss at per 50 pips away, and your take profit will be at least 75 pips away. So let me say, when you are risking 50 pips, at least your take profit will be about 75 pips or 100 pips. Are you getting me? That is number 1. Sorry, that is number 2. Then the sub 3, which is number 3, is trading journal. Document every trade, chart screenshot, reasoning, emotional state, outcome, and review weekly to identify pattern in both your wins and losses. Are you getting my point? So you need to journal your trades, put your screenshot, reason as a trader, your emotional state and your outcome. Review this weekly. It will help you to get better at trading. Are you getting my point right now? It is very, very important. Keep your trading journal very seriously. Then the part 5 of this video, which is developing the trader's mindset. Yes, of course. Developing the trader's mindset. Are you getting me? Patience over activity. Like I have stressed previously in this video, patience is a very key tool or very key thing you need to know as a trader. Are you getting my point? Because indicator traders often feel pressure to trade frequently. Naked traders or pure price action traders might only take 2 to 3 higher quality setup per week. Because in trading, what is very important is quality over quantity always win. Yes, of course. Quality over quantity always win. You don't need to trade 100 trades in a week. No. All you need is one, two, three quality trades. You can make money consistently in Forex. You don't necessarily need to be trading every pair, to be trading every setup you see. If you'll be masquerading your account. No. Just one, two, or three quality trades in a week is okay for you, and you'll be see yourself making consistent profit. Number two is embrace simplicity. Yes, of course. Embrace simplicity. The market isn't complicated. No. Our analysis is often complicated because we have too many trust issues when trading the market, and we have too many indicators we place on our chart, and sometimes it tends to confuse us. Are you getting my point? So trust what you see with your naked eye in the chart. Are you getting me? Trust what you see with your naked eye in the chart, not what you think that should happen. So when you are trading, trade based on what you see in the chart. Don't trade based on what your mind is telling you. No. Trade what you are seeing, not what you are feeling. Because the market doesn't care about your emotion. No. Are you getting my point? Then the other one is acceptance of losses. Even with perfect analysis, some traders will lose. Are you getting me? This is the business expense, not failure. Protect your capital and live to trade another day, because there is a saying that goes like this: we live to fight another day. So even when you analyze and you hit your stop loss, don't revenge trade. Don't revenge trade. Just be patient, wait for the next trading opportunity, or wait for the next day, because trading is not going anywhere. Trading is still coming tomorrow. Are you getting my point? Then common pitfalls and how to avoid them. Are you getting me? So these are one of the common pitfalls you need to know and how to avoid them. Pitfall number one: over trading is in quiet market. Yes, of course. Listen to this: over trading in quiet market. This is the solution for it. Because when I tell you your pitfall, I will tell you the solution. If the market are ranging without a clear structure, step away. Wait for volatility to return. Yes, of course. I will repeat it again. If the market is ranging without a clear structure, step away from the market. Wait for volatility to return. Then you can trade. Then pitfall number two: moving stop losses. Let me tell you the solution. Set your stop loss based on market structure, not your pain threshold. Are you getting me? Set your stop loss based on market structure, not your pain threshold. Once set, don't move it unless it break even or after a clear momentum. Are you getting me? Then pitfall number three: revenge trading after a loss. This is one of the things that makes traders to blow their trading account. Revenge trading after a loss. This is the solution. After a loss, take a break. The market will still be there tomorrow, my brother. Are you getting me? After a loss, just take a break. Discipline yourself. The market will still be there tomorrow. Are you getting me? Then the pitfall number four: adding to a losing position. This is one of the drugs that traders take. You will see that you are losing money in a single position, and you are still adding another position on top of the losing one. My brother, be patient until the first one materialize, whether in profit or loss. Then before you can execute the next trade. Because once you are adding to a losing position, your account balance will be definitely doing what will be reducing. Are you getting my point? So here is the solution of this pitfall number four: never average down. If the price goes against you, your analysis was wrong. Accept it and move on. That is it. I get my point. If the price moves against you, no worry. Don't worry. Move on. Accept it and move on. Because one problem is hard that we as human beings we hardly accept our mistakes, and it is very applicable in the market. Once you lose money in the market, accept your mistake and move on. Know why you made the mistake and correct it. Don't try to blame the market or the market is rigged against you. No, I get my point. Just move on and wait for the next trade. Then putting it all together, let me break down, a sample trade, a sample trading day for you. Understand? So a pre-market. So you need to take, you need to take at least 5 minutes or 10 minutes or 20 minutes of your time. But let's be that you shake it very well. One, which is the pre-market, which is shake a higher time frame, which is number one. Identify the key level from daily or weekly charts. Note any major news scheduled. Also, before I forget, make sure to check out major news before you enter any trade any day. You can make use of forexfactory.com or myforexnews.com. There are several forex trading news platforms out there on the internet for you to check out your daily news as a forex trader before you execute any single trade. I get my point. So, which is number one, check out your higher time frame. Identify the key level from daily or weekly charts, and also note any major news scheduled, which I've already tell you the platform you can go check out. Number two, market open. Observe initial reaction of any news or overnight move. Are you getting me? Don't trade the first hour unless a clear setup forms at a predefined level. Number three, active trading session. Watch price approach your market level. Be patient if a setup forms. Execute according to your rule. If not, do nothing. Are you getting me? Then four, end of the day, review any trade taken. Update your journal. Mark new level that formed during the day so that it will help you for you to go for another day trade of the next day. Are you getting me? So these are basically what you need to follow and understand. This thing I put together are four, sample trading day. A four sample a trading day practice you need to practice. Understand? Are you getting me? Just the pre-market, check out the higher time frame, which is the key levels. Number two is when the market is open, observe the initial reaction of the market. Then number three, active trading session. Trade on active trading session. Don't trade in a slow session. No. The best session to trade forex is during the London and the New York session, which is the overlap, or during the London session. Trade when there is high volatility in the market. Are you getting me? Then number four, end of the day, you need to review your trade and know whether it is a profit or loss. Then overview it and know what you do right and know what you do wrong and work on them for the next day trade. Then in conclusion, the path to mastery. Trading forex without indicators isn't a shortcut. It is a return to fundamentals. It requires more screen initial as you learn to read the subtle language of the price. But this investment pays dividend in developing true market intuition. Are you getting me? So start by practicing on higher time frame, your 4-hour and daily, where the noise is reduced, because there are so many noise on the smaller time frame, like the 10 minutes, 5 minutes, 15 minutes, or 30 minutes thereabout. But if you want to analyze the market based on the higher time frame perspective, which is the daily, the 4 hours. Pepper trade for at least 2 months while you train your eyes to see setup. Then when you transition into real money, start small. Are you getting me? When you're trading a live account, start small. Don't go deep. or don't go with big amount of money as a beginner. No, start small, start gaining experience small, small, little by little. Are you getting me? So remember, every master was once a beginner. Get it from me. Every master was once a beginner. Don't compare your number 1 to someone else number 15. No, it doesn't work like that, and it doesn't make sense. So the chart you are looking are the same ones viewed by institutional traders with millions of stakes. Are you getting me? So the chart that you are looking at are the same ones viewed by institutional traders with millions at stake. They're really reading the same price action, and the difference isn't the information available, but the interpretation and discipline applied. So the market speaks through price. Learn its language, and you will find trading success that no indicator can provide. Are you getting me? So the market speaks through price, because that is what the people always say: price is king, price is queen, price is everything. Learn the language of price action, and you will find trading success that no one indicator can provide. Now, what I need to do right now is to open a naked chart on your MT4 or MT5 in your phone or in your laptop. Take a deep breath and start truly seeing what the market is telling you. Are you getting me? Now, as you can see this picture or this diagram in this my screen, you see the diagram of a new trader. Are you getting me? Are you seeing the too many indicators in front of this person's screen? As a new trader, there are too many indicators, so many indicators, and that indicator is causing confusion to that new trader. Are you getting me? Then see the other diagram, which is a pro trader. Are you seeing now? This market now is in a pure downtrend. The market is moving in a series of lower low, lower high, lower low. So this market is now in a pure trend. Is in a pure downtrend. Are you seeing how neat and how clean this diagram is than to compare the new trader or the trader who just started newly? Are you getting me? So are you seeing how clean this market is? Are you seeing how rough the new trader market is in this diagram? Are you seeing how neat and clean the pro trader is? Because in trading, you need to keep things simple. Yes, you need to keep it simple. Don't complicate things. Are you getting me? So learn from this diagram that I'm showing you. Are you getting me? Then the next thing you need to know is, if you want to be a trader, yes, start with equity. Yes, which I've already told you before. Trade with small quantity. Yes, start small. Avoid revenge trading. Yes, of course. You need to avoid revenge trading. Then say no to leverage. It is very, very important. Say no to leverage. When I mean leverage is say no to high leverage. Leverage is good because it helps you to make way more money. But you need to be very careful because it is a double-edged sword. I get my point. Then keep a trading journal. Yes, of course. I have already told you before. Keep a trading journal. Journal your trades. Then the other one is less indicators, more price action. Yes, of course. Say no to indicators and go more of price action. Then, and also remind yourself that market is always right. Never fight with it. Yes, of course. You need to remind yourself the market is always time, all the time. So you don't need to fight the market. Anything the market do is good, because you cannot question the market. Are you getting my point? Because market is not your father, or neither is your mother. So anything the market does is good. Are you getting my point? So don't fight with it. Just be disciplined with the market, because discipline pays off at the long run. Are you getting my point? So let's continue. In this diagram again that I'm about to show you, you need to know and understand why patient traders are rich. Yes, of course. It still boils down to what I have teach you before in this video, which is patient. as a trader. So you need to know why patient traders are rich. Then in this diagram, we have two set of people. We have the impatient traders and we have the rich traders. Are you getting me? You know in this diagram where a proper risk management and patience boils down. The first trader, which is the impatient trader, took the first trade. He lost $200. If you can see it, I hope you are seeing very well. Then he took the second trade. He makes $20. Then took the third trade. He loses $300. Then took the fourth trade. He makes $400. Sorry, he makes $150. And took the fifth trade, which is the final trade. He makes and he loses $400 right now. So in total, he lost 400 plus 300, 500, 600, 700. He lost $900 and make 150, $170. Are you getting me? Then his balance is $720. But let's go to the rich traders. He took his first trade, he lost $100. He took his second trade, he lost $100. He took his third trade, he lost $100. He took the fourth one, he makes $2,000. And took the fifth one, he lost $100. Then his account balance is $1,600. Have you seen the difference between the impatient traders and the rich traders? If you can understand what you can depict from this picture is proper risk management. The rich trader has a plan for his trade. He loses $100 on each trade that he is risking. He is risking $100. But the other one is just risking any amount of money that comes to his mind. He's just risking randomly. He just trade randomly. That is why risk management is very, very important and patience is very, very important. Are you seeing it? At the end, the rich trader, which is the patient one, makes money. And at the end, the impatient one lose money. Which simply means that something that Warren Buffett says that the market collect money from an impatient traders and give it to the patient traders. So you need to learn how to be patient as a trader. I cannot overemphasize this. I get my points. So last, the impatient traders gives up on trading and say trading is a scam. And the patient traders do what? Cut his losses very fast and let the winners run. Because sometimes what we normally do is that when we let our losses run too much, but let our winning run small. I get my points. So you need to learn this very, very well. Cut your losses and let your winners run. I get my point. So it is very, very important. So if you have watched this video up to this moment, please make sure to like this video. Make sure to subscribe to my YouTube channel and also comment down below if you have any single question concerning any of my single videos. Are you getting me? So without further ado, and without wasting much of our time, I'll be seeing you in my next video episode. Please drop your question and ask me any of your questions, and I will see you on my next video episode. Please, if you have watched this video up to this moment, thank you for sticking with me, and I will see you on my next video episode. Bye for now.